But let's address what's happening in the zinc and aluminum market. The fact that prices are surging, Buddle smelter is looking to halt production, high energy prices have forced plant shutdowns. So just wanted to understand the ramifications and repercussions of all this. Peter Mcguire joins in on the show for exactly that. Peter, hi, good morning. Great to have you on the show. Peter, just wanted to analyze, some of these key smelters halting production come September 1st. That is somewhat creating panic, at least when it comes to zinc. What could be the ripple effect like?
Well, good morning. A couple of things. I think one could be most importantly, which is price. You know, when we've put our mind back over the last couple of months, we've had 4,500 a metric ton for zinc. That was in April. Then it collapsed all the way down to 2,800 and it's bounced back. We're now sitting at about $3,500 a metric ton. So incredible volatility, up nearly 30% over the last few weeks. And that's quite evident. Price dictates, it tells a lot of stories, price. A lot of the fundamentals come down to one thing, and that's price.
It's more supply. And here there is a shutdown, which in a sense is something which is a planned shutdown. Is this been done keeping in mind to get commodity prices right back up?
Well, I don't know. That's a broad statement, Nikuj. So I think we sit here and we realise that base metals are incredibly volatile. You see massive sell-offs and volatility and whipsawing of markets. It just seems to be very much a part of how they operate. And when you see, downdrafts of, 30, 40%, and then they bounce and then they go back up, maybe it's a price, it's a mechanism for as far as price stability and trying to boost price. I'll just have to wait and see what happens as far as zinc prices over the next 6 to 8 weeks.
Peter, where does China fit in the entire equation? It's still yes, no, I don't know, black box.
Yeah.
Is the dragon going to start guzzling like never before when the economy opens up in the second half, or the dragon has gone into a long hibernation?
That's from anyone looking in, and I'm doing this from Sydney, and I haven't got people on the street there, but I know that the major concerns are the COVID lockdowns, the dislocation across a large nation and its consumption base. You've got a property sector in peril when you're looking at the size of the construction industry and what's happening there. So that's a great concern, and naturally that's a big employer of base metals. So if the China market stays locked down till the end of the year, then that'll certainly won't be a plus sign for commodities. But if they were to do something aggressively and start opening up, fourth quarter onwards, then that's going to be a plus. And I think it's just a wait and see scenario, wait and see prognosis as far as, what actually is going to be the pathway forward, especially for growth.
Good morning, Peter. Since we are on the topic of China, and we wait for the economy to start doing better, and then we'll see what's happened with commodity prices. What is, however, happening now is a power shortage, a power crisis of sorts, and with the Chinese government, directing power supply from industrial use, from metal producers for residential use. Is that also adding to the global shortage supply concerns, and is that something else we need to watch out for when it comes to pricing?
Well, exactly right. And, how you organise as far as energy and, electricity consumption. And we all understand the dynamic move that electricity has seen as far as growth consumption especially in China over the last decade. And how do they fund that? You're looking at gas-fired power plants, nuclear-fired power plants. It's just an ongoing consumption headache for any central government as to how do you power the nation. And your consumption, air conditioning, everyone's wanting a better quality of life. So the draw on electricity is just increasing, electric vehicles and so on. So yes, China's got its hands full in many, many ways. And how it moves forward with coal consumption is they're not going to back down on that because they realize it's a quick energy and it solves a lot of their internal problems.
So we've already started to see, because of high energy prices, the impact that we're seeing on aluminum as well as zinc. There's some chatter that will copper be insulated. You track commodities very, very closely. So when we look at base metals, this week it's been about aluminum and zinc. Do you think it'll have a cascading impact on other base metals, whether it's a copper, whether it's a nickel?
Well, I'm keeping a close eye on them. I mean, the focus has certainly been on zinc in the short run. Aluminium's had a nice uplift, but it's still, from those lows that we experienced, it was heavily sold off over that last 6-month period where we were at 3,850 a metric ton, collapsed to 2,350, and now it's sitting there at 24.11, 24.20. So it hasn't had really a big lift up compared to what we've seen as far as zinc. Zinc's been the real star over the last month. And copper it rallied strongly from 7,100 to 8,100, but it's certainly that steam has run out of it. So we're just sitting here observing, seeing where everything goes. I'm keeping an eye on nickel and naturally a lot of the other base metals because they tell a story from consumption. They tell a story as far as global economic health. And the overall consensus on Main Street, what's happening, and it's a wonderful barometer for reality.
Right. Peter, great to have you on the show today. Glad that you could take time out and speak with us today on ET Now.
Thank you very much.